Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues, today's Rapid Fire Friday. For those of you who are listening to the live version of the show, which is happening Friday morning, 8 a.m. Central Time, 9 Eastern Time, our phone lines are open. If you've got questions about financial issues, stewardship, how to be a biblically responsible investor, if you have specific questions about our strategy, give us a call, 610-363-1110. Those are the things that we are going to be talking about today, along with making sense of the recent sell alerts that we've sent to partners and when to sell, what to do when the market drops. We'll also have a recap of this week's biggest economic headlines and, of course, get to your calls and questions. So get those calls queued up now. 610-363-1110. Our stewardship verse today comes from Ephesians 5:15 and 16. Look carefully when you walk, not as unwise, but as wise, making the best use of time because the days are evil. In the verses that precede this one, we are encouraged to be imitators of God and to live as children of light. But before we can put those commands into place and be doers, not just hearers, or even worse, just repeaters of the word, we have to get a really good understanding of who God is and what he is like so that we can do a good job imitating him. And to make sure that we don't misrepresent him when we are imitating him because we misunderstand his character and nature. So his character and nature are revealed in his word, and we get to know him by reading his word and studying his word and meditating on his word. These days are certainly filled with evil, as the scripture accurately predicted and reports. Our enemy, the devil, is prowling around looking for an opportunity to pounce on any believer who's not wearing their armor or any believer who is seen to have kinks in their armor. So you tuned in to hear suggestions today on how to be a good steward and or how to handle your investments. And you may be wondering, well, how does this scripture really connect with all of that? Well, being imitators of Christ is a command for every endeavor we undertake, even investing. That's why it's a great thing to do, biblically responsible investing. That's a great way to be an imitator of Christ by avoiding the things that grieve his Father's heart.
Yep. Well said there, Shana. I love that. You know, stewarding our time is one of the topics that this verse talks about, and it's of prime importance for the Christian, just like stewarding our money. I think those things go hand in hand. These days are evil, and I think because of that, we need to be wise. And, you know, the wise man knows that his time is shrinking away. He must get the most out of it for the glory of God, and so I hope we can be wise with the time that he's given us. Amen.
Amen.
Well, we have several partners, Shana, who are asking to just for some wisdom on being wise with what they have. And of course, as you mentioned at the top of the show, we want to make some sense of these recent sell alerts. So we got a couple partner questions that came in. One of them was from Menda. Menda's question reads as such: if it's the time to buy when the market drops, why are there so many sells right now? This confuses me. And then a similar question, Shana, came in from Dale. He's saying, I'm not certain I understand how the August 8th sell alert comports with the Financial Issues long-term hold philosophy. The third paragraph states, quote, these long-term holdings are still valuable, worth retaining, but then we issued some sell alerts for some of the long-term holdings that he required from the buy list. He's wondering, did I miss something? Did you never state why these particular holdings should be sold at this time? Shana, what advice can you give to both Menda and Dale?
Yeah, great. So we didn't articulate each and every reason for each and every company on the list. So I would agree, with the statement that we have a long-term philosophy and that it's a good thing to buy when the market drops. However, when the market drops, opportunities are created, but not everything is a good buy just because the price is down. So Dan used to always repeat the old Wall Street adage don't try to catch a falling knife. So, that's part and parcel there. So I do see, and what Dale's talking about is, and maybe I can clear up the confusion there about these valuable long-term holdings are still valuable and worth retaining. What I'm speaking to are probably the 70 or 80% of the stocks that he still has that he bought off of the buy list. So, there are times when sell alerts are issued. We have a buy and hold or buy and manage strategy, not a buy and ignore strategy.
Yeah, that's good stuff. You had mentioned one of Dan's quotes there, the old Wall Street adage, don't try to catch a falling knife. There's another quote Dan used to say, Shannon, interesting. It's almost impossible to buy when the market's at its lowest, so the goal is to buy when it's near the lows. How do we reckon this? Because none of us knows when the market's going to be at its lowest. What do we make of this?
Yeah, that's exactly right. You won't know when it's happening, when the market has reached its lowest point. In fact, you probably won't even have that realization or understanding until you have 6 to 12 months of hindsight. So impossible, it's impossible to buy at the low of the market. Might be a tad bit of hyperbole, but, there's a small possibility that it may happen, that you may just happen to buy at the lowest point. But, I can feel very confident that it won't be because it was intentional. It won't be because you knew that was the bottom. And like I said, you might not even actually know that you've done it until you have a good bit of hindsight.
Yep. Good stuff. So then the follow-up question, Shana, is how do we follow the strategy wisely without trying to time the market? Understanding what Dale and Menda had said, how do we do this well?
Yeah, so let's define timing the market a little bit. To me, timing the market is making big moves, moving all of your money in or out of positions based on what you believe is coming in the short term. So most companies' stock prices move in cycles, and it's sometimes clear when their price is more attractive than at other times. I mean, there's a lot of companies that we're looking at that we think are really good long-term companies, but we just want to hold off a little bit because we think a more attractive entry price may be coming. Like I said, we are a buy and hold strategy. We are not a buy and ignore strategy. It is important also to monitor your investments. So, and I see Billy's in the call queue there about this particular one I'm fixing to bring up. So this might answer his question, but I hope he'll stay on and maybe he'll have another question. But, MA40 was on the sell list as well. And, when you look at the long-term performance of that particular company, well, it didn't actually pan out to be exactly what we were expecting it to be. So, you don't buy a company for 8 to 10 years and then sell it after 8 to 10 months just because it hasn't done what you thought it was going to do over the next 8 to 10 years. But if you get some years into it and it doesn't look like the company is performing like you thought it would, then, that is a good reason to get rid of it and get something else that you think is going to, to do better over the long term.
Yeah.
So that's kind of the thought pattern there.
Yeah, good stuff, Shannon. That's really helpful. And then just a final follow-up. With our current strategy position, this is a question we've gotten from some folks as well. How do we stay well diversified in the midst of what we saw last week?
Yeah, so even with the sells and the mini sell alerts that have gone out recently, and I hate to say this, but there's going to be another one coming on MA38, but it's because it's no longer biblically responsible. Yep. So wait for the alert on that. We're going to try to get it out to you pretty soon. But even with the sales that we've done recently, there are many companies that, if you bought, like Dale said, when they were on the buy list, there's probably a lot that you still own, and we haven't suggested that you sell those. So my experience, based on the hundreds of portfolios that I manage for my clients, following exactly the financial issues model, I'm assuming that partners are probably about 15 to 30% in cash and CDs. On the lower end, if you're younger or have a more aggressive risk tolerance. On the higher end, if you're closer to retirement or have a lower risk tolerance. But, like I said, I'm eating my own cooking. I'm following the strategy, and so I assume that the partner experience is going to be pretty similar to what I'm seeing with the portfolios that I manage. So going 15 to 30% in cash is not extreme. So we're not deviating from the long-term strategy. We are not trying to time the market. We're just trying to be a little bit prudent with the things that we see unfolding in the economy. The markets have had a little bit of a reprieve, but I don't think that means that we're out of the woods. So,
yep, it's helpful stuff there, Shana. Thank you. That's good.
Well, good. I think we are coming up on a break here. So it is Rapid Fire Friday. Phone lines are open. 610-363-1110 is the phone number if you want to get into the call queue. We are going to take a short break here, but we're going to be back with more financial issues.
On the day I found I was pregnant, I was full of emotions and I just was so overwhelmed, and I don't know if I'm ready for this huge life-altering, changing commitment. I had individuals around me not wanting me to have this child. And somehow, I was driving and I saw the Women's Help Center sign and I immediately turned in. That just took relief off of me, and I was like, you know what? It's gonna be okay. They gave me the confidence and the support that I needed to be able to go out and face the world. First time I held Finnegan, I just lit up with joy. I was so excited. This little boy that I had in my life, he is loving and generous. Watching him just grow and flourish into this incredible human being has just been so rewarding and so uplifting. Looking back, I don't know what I would do without him, because I needed him more than I think he needed me.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Welcome back to Financial Issues. Phone lines are open. Rapid Fire Friday, 610-363-1110 is the phone number. And we'll get to some calls after I update you guys about the things that you need to know from the following week and the coming week. Because at Financial Issues, we help you to stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets, and help you understand how that impacts your personal financial issues and our biblically responsible investment strategy. So here's a summation of the economic news that has happened just this week, ending August the 16th of 2024. So markets have rebounded nicely over the last week, since all of the economic data this week has come in, I would call it very decent. The S&P is up over 4% over the last week, but it's still 2% below its mid-July all-time high, and up over 16% year to date. Dow, similar story, is up 3% over the last week, but still almost 1% below its mid-July all-time high, and it's up year to date about 7.5%. The NASDAQ has been the big winner this over the last week, but probably because it was the biggest loser over the market drop. The NASDAQ is up over 5% over the last week, but it's still 5.5% below its mid-July all-time or early July all-time high. And it's up 19% year to date. The pre-markets are indicating a little bit of a negative opening. It looks like the markets are going to be taking a breather after a very, very strong week. Inflation data came in this week. We got the producer price index and the consumer price index on Tuesday and Wednesday of this week. The officially reported pace of inflation continues to decline, but at a minuscule pace. Translation, prices are not rising as fast as they were 2 summers ago, but they're nowhere near going down. Declining prices would be deflation, not disinflation. And this news seems to keep the Fed on track for a cut in September. Now, odds right after that market blow up, there was talk of maybe the Fed will do an intermeeting emergency cut, and they're definitely going to do 50 basis points in September. The odds are now greater for a 25 basis point cut in September, but we still have the August jobs report coming out before the next Fed decision. The market is actually pricing in right now a 200 basis point rate cut in the next year. Now, the Fed's dot plot only indicates 100 to 150 points worth of cuts by the end of 2025. So once again, the market is expecting more than what the Fed is saying that they are likely to do. So this leaves a lot of room for disappointment. The market expecting 200 points. The Fed only kind of saying that they're seeing 100 to 150. This is another reason that we are asking the partners to be a little bit heavier in cash right now, because the market is expecting something that the Fed is probably going to be very, very slow to deliver. And any disappointment, or any lack of failure for the Fed to do what the market is expecting means that the markets will react pretty negatively. So headline and core CPI in July each rose 0.2% month over month as expected. The official annual rate of inflation is now 2.9% for PPI and 3.2% for CPI. They're both 0.1% lower than last month. The biggest disappointment in those numbers was auto insurance. Auto insurance remains a big problem. I'm sure you guys are all quite aware of that. Prices are up another 1.2% month over month, which doesn't seem like a lot until you look at the year over year number. Auto insurance rates are up 19% year over year, and that's a big impact to the consumer. So prices as measured by CPI are officially, that's the official number, up 20% since Biden took office. Does it feel like 20% to you? No. And here's why. Rents and home prices aren't included in the measure, and they don't measure all the things that the average American actually spends money on every single week and month. And it surely doesn't account for all of the other ways that we're being nickeled and dimed to death with junk fees, the creative ways that service providers have used to increase their total ticket cost on us without actually having to raise the official price. For example, drinks when you go out to eat, non-alcoholic beverages are like $4 a drink for a fountain drink that you go get yourself.
It's ridiculous.
They charge.
Still expect a tip too.
Yes, they do. They are also charging a la carte for everything from picking your own seat when you get a plane ticket, adding your luggage, your carry-ons, to adding cheese, bacon, and everything else to your burger. burger price has gone up, but not as much. But then when you add all those add-ons, it really makes all of those costs go up. So an economist said in an article that I was reading this week that the Fed is acting like a child that covers his or her eyes and thinks that they have disappeared. Because the Fed likes PCE, the PCE measure of inflation, rather than CPI, which PCE is always about 100 points below CPI. And by doing so, they believe that they are very close to their inflation target. Retail sales on Thursday, these were the things that we were watching this week: inflation, retail sales, Walmart earnings, all that. So retail sales on Thursday came in much stronger than the street expected, and much stronger than I expected as well. I do still think that although my concerns for the economic data this week didn't quite pan out, they are still very high on my radar. I do think that we're going to start to see more deterioration in those things. Will we come into a recession? That's yet to be determined, but the odds are increasing. But retail sales came in much stronger than expected, and Walmart did not disappoint. So Walmart is clearly coming out to be the leader in the retail space. They're doing a good job. Now, Walmart's not biblically responsible, so don't take this as a buy recommendation. But it's interesting to see what Walmart says about the behavior of the consumer. They've been getting more and more market share from the others, and groceries are becoming their biggest revenue generator. So they have a lot to tell us about what the consumer is doing. And they're saying that the lower end consumer definitely struggling, the higher end consumer even making choices now to to downgrade in their choice of brands and things like that. So, and definitely more spending being spent on needs versus wants. So, what's coming in the next week? Well, nothing that's going to be terribly earth-shaking. We do get the minutes from the most recent FOMC meeting that are going to be released, which is going to be accompanied by, I'm sure, much Fed speak. I didn't look at the calendar, but the Fed meeting happens. They tell you whether they're increasing or decreasing the rate. Then they have a press conference, but you don't get to see everything that was said in the meetings, or at least what's officially recorded in the meetings, until they release those minutes. So, if everything that shows up in the minutes was well telegraphed and well communicated with Jay Powell's statement and the press release and the Fed speak that's happened since then, the market will probably not react very much. But if there's something different that the market perceives as, they hang on every single word of what happens in those meetings, and it's almost gotten to the point where it's sort of counterproductive for the Fed. Used to just be quiet and they used to just do what they were going to do and issue their decisions. But, now they talk a lot, and that tends to move markets a lot. So we also get the durable goods next week. That will be, another economic indicator that will give us a peek into whether or not, or how quickly economic conditions are deteriorating in the United States. So the markets yesterday ended a very strong day. The Dow ended up 1.39%, S&P 1.6%, NASDAQ up 2.34%. So markets are indicating a negative open this morning. Probably just taking a breather. I don't think there's really anything earth-shattering to come out today. So we'll keep abreast of that. You can rest assured of that, and just make sure that if you're a partner, that you are logging in at least once a week, checking the commentary there to see what we post. We give the partners a little bit of a deeper look into what we're thinking and how to apply that to our strategy. So Now that you're in the know about the recent and upcoming financial issues, we hope that you will learn more about our ministry and consider becoming a partner of the ministry so that you can keep abreast of what's happening, how that impacts your own investment management decisions, and learn how you can become your own portfolio manager, how you can screen out the companies that are contributing to and funding the darkness that is happening in corporate America. So we hope that you'll find out more about that by going to financialissues.org.
Yeah.
Well, I don't know if we have time to get to.
Yeah, Shana, we got a question just came in from Claude. I'd love to hear your thoughts quickly with this. He's
Okay.
asking, if someone came to power that got rid of the Fed, what do you think that would likely do to the economy? Any thoughts on that?
Oh boy, I don't have enough time to go into all that. I don't think that they'll do it.
Yeah.
There's a lot of talk of that. There's, and you have Donald Trump, who has come out and said that the government should be able to exercise control over the Fed's decisions. And now you have Kamala taking the other side of that, saying that no, the Fed needs to remain independent. The Fed is officially independent from political issues, but there's definitely influence that is wielded over the Fed by political forces. There's no doubt about that. But I don't know. I'd have to see what the solution would be if they decided to get rid of the Fed. It would that's a big deal.
Yeah, because you would almost have to wonder, like, would the opposite solution be even worse?
Yeah.
So.
Exactly.
Yeah.
So, well, folks, if you listen on a station that only carries the short version of the show, we bid you a farewell and a great weekend this weekend. But if you want to catch the full show, go to financialissues.org, or better yet, download our phone app so you can get all the episodes for free when it's convenient for you. Stay tuned. We'll be back with more financial issues. Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org, and click on the Preborn logo. Save a baby, save a life.
Here at FISM News, our mission is to provide you with news from a source you can trust.
The news is a constant reminder that this world is not our home. It is marred by sin, resulting in wars, brokenness, and divisiveness.
Jesus promised that he will return soon to judge sin and make all things new. Until then, we place our hope in him.
This is the good news, the most important truth we feel compelled to share.
Fear and uncertainty can cause us to hold things tightly and rely on ourselves. But during uncertain times, as believers in Christ, we are called to surrender fully to our sovereign God. The call to surrender to Jesus is one step in our growth in holiness. And it doesn't just mean you give over a few things. It means he gets it all, including our finances, our investments. Learn a biblically responsible investment strategy proven over 25 years. Keep the money God has entrusted to you out of companies that participate in things that God detests. Fully surrender. Become a Financial Issues partner today. Learn more by going to financialissues.org/join. That's financialissues.org/join.
Well, this property was actually purchased by my great-grandfather, and we were able to come back to the farm a few years back to keep the family farm, hopefully, in the family.
Working together is a lot of fun sometimes and can be very challenging.
Iron sharpens iron.
Iron sharpens iron.
We want to try to provide the freshest possible and healthiest possible produce for our neighbors and our friends and the people that we are able to touch in their lives at the farmers markets. Samaritan Ministries is a perfect fit because we feel like we can actually partner with other Christians to help them provide for their medical needs.
We're Tony and Ginger Malik, and we are Grandma and Grandpa's farm in Sparland, Illinois, and we are Samaritan Ministry members.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. We're so glad that you have stayed tuned for the rest of Rapid Fire Friday. Maybe we can really have a Rapid Fire Friday now. So we've got Jay in the call queue, and if you want to be the next caller in the call queue, make the phones ring by calling 610-363-1110, and you will be next up in line. So let's get to Jay, who's calling from Texas. Hi, Jay. You're live on Financial Issues.
Hello, Shana. Thank you for taking my call, and thank you guys for doing what you're doing. I'll be 80 in 2 weeks, and I have the dubious distinction of time horizon shrinking quickly. And, yeah,
we all do, actually.
That's right, brother. There you go.
You know, it's a moot point because God's going to call us when He's ready for us.
That's
so,
right.
Amen. There you go.
I quit worrying about that. But I have, I've taken your advice. I have most of my cash in short-term CDs, and I use Charles Schwab for my brokerage. But I noticed, if Charles Schwab has the CDs that they offer out there, and the interest rates have gone like from 5-point-something% to 3 point, so they're shrinking. And then the banks offering these are, like I told your call screener, I just don't trust the shifting sands of Galveston Bank. I just don't trust them, even if it is FDIC. Is there anything you have to tell older people like me to put their money? I have FP83, FP50, the EFT1. So I have done that, but what's your advice on that, please?
Okay. So, it'll be up to you when you're doing CD investing, if you see something that just doesn't sit well with you, that's fine. Skip over it and go to the next thing because there's plenty of them out there. But, I would say that if you're looking at CDs and it's FDIC insured, it's probably okay. As long as you don't exceed the insurance limit for that particular financial institution. So, if you have a very large portfolio and it's just you want to make sure that you don't get more than about, $250,000 into a CD with one institution, regardless of the maturity dates on it. So that's the great thing about using a brokerage platform is that you can buy CDs from financial institutions around the country. So there's probably many more. And you mentioned, CD rates going down from 5 to 3%. That's a good bit of a drop. It's not quite what I'm seeing yet, but that was the reason that we really had you, ladder out between 6 months and 2 years because, I knew that when the Fed does decide to drop rates, that money market rates are going to follow in line. They're going to drop quickly, and they're going to drop to the extent that the Fed is lowering rates, and short-term CD rates would follow as well. So, the good thing is if you did get some of those longer-term CDs, not really long-term, but 1 year, 2 years, you probably still have a good bit of your CD portfolio that's still getting 5%. And then, I'm sorry, your other question was about the preferred stocks and ETF1. And could you repeat that part of the question for me?
FP 83, FP 50, and ETF 1. So you do say that's the safest place to put your investment money in right now. And so that's what I'm doing. And, the thing, when you get to my age, you start playing with I'm taking as much out as I can of my investments to get by this year, trying to replace what I took out. And, that's a tough game to play when you're trying to buy bread at Walmart nowadays, or one of them. And, you understand what I'm saying? It's just, I guess it's a game we're caught in, though.
Yeah, absolutely. There's not much that we can do, not much at all that we can do about the inflation that's already happened to us. But, and I just wanted to clarify that thing when you said that that's the safest place to put the money in preferreds in that particular ETF that you mentioned. And I just want to clarify that by saying there is risk to every single thing that you can do with your money. So there's risk in those things, but, the volatility should be lower in the things that you mentioned than in, some of the other stocks in the sectors and some of the other, small cap, mid cap, international kind of investments that you could get into. But, you bring up a really great point, Jay. And, you said that you're 80 now. Only the good Lord knows how much time that you have left before he calls you home or comes to get you. But, even at 80, don't have a chart in front of me, but your life expectancy is probably somewhere in the neighborhood of another 5 to 10 years. And that's still considered pretty long term. And since we don't know what inflation is going to do, going forward, if the government and our government and world governments continue to spend money and borrow money like they have been, inflation is going to be something that's going to be really, really hard to tame long term. So, you do need that growth in there. So I hope that you have been able to accumulate some of the other investments that have been on the buy list in the past, even though, for the last, week or two, we haven't had anything in that persuasion on the buy list. There will be things that do come back. So, the antidote for the higher inflation that you're seeing is to grow money. And it's not uncommon at all, to get to the point of life that you're at when you're 80 and you start to use up some of your principal. It's not the worst thing in the world. It's what you planned for, so you want to try to stay when you're in the younger retirement years, 60, 65, 70, in that decade, you want to make sure that your portfolio is growing at a healthy rate. But, once you get closer to the end of life expectancy, the focus really becomes on income and being able to use that to pay for, your everyday expenses.
Yes, ma'am. Well, maybe they ought to have an election every year. That way it'll stay at 2.9
Oh, boy.
There you go, Jay. That's one way to do term limits, right?
Yeah.
Okay. Thank you very much, Seth and Shana. Yeah, we love you guys.
Oh, thank you,
Thanks,
brother.
Jay. We love you,
You're
too.
welcome. God bless.
All right. So we do have another call in the queue, but we don't quite have time to get to it before we get the ag report. Do we have any comments or anything?
We got a quick one here, Shana, we might be able to get to. Stephen owns E48, is down about 11% in the stock. Would you recommend dollar cost averaging, or should he just wait it out? He's 48.
Man, that's a tough one, and you're putting me on the spot there, Stephen. So that particular company is one that we like and that we're looking at, but being 11% down is not really territory for averaging down. You really want to be down 20% or more. But I would say, because I do like that one so much, if your holding is less than 2% of your portfolio, you could consider it, because I just don't know that one will get much cheaper, but it could. So I hope that helps you. All right, folks, we're going to hear from Craig Haugaard coming in here, and then we're going to take a break, and we'll be back with more financial issues.
This is Craig Haugaard with your Financial Issues Ag Update for August 16th. Well, corn had a slow news day yesterday with traders focused on spreads and a weakening basis. The U.S. Drought Monitor shows that just 6% of the corn production area is experiencing drought as this crop continues to develop with minimal stress. As a result, December corn was 3 3/4 cents lower yesterday, closing at $3.97 per bushel. A somewhat disappointing export sales report, an underwhelming monthly crush number, and a softening CIF market all combined to keep soybean futures from giving us a second consecutive higher close. When the closing bell rang, November beans were unchanged at $9.68.5. The wheat markets were stronger in the overnight trade as newswires reported Russian missile attack. It hit a grain silo in Odessa. But once the day session started, it couldn't hold the gains, and we finished lower on the day. The market is still waiting for significant demand to surface, and until that happens, wheat is probably going to struggle. Yesterday saw Minneapolis September wheat 5 3/4 cents lower at $5.86 1/4. Kansas City dropped by 9 1/4 cents to close at $5.37, and Chicago was down 6 1/2 cents, ending the day at $5.28 1/4. Cotton had disappointing weekly export sales number, but managed to kind of close slightly higher in spite of that. At the closing bell, December futures were 10 points higher at 67.15. Livestock futures were mixed. We had October live cattle $1.37 1/2 cents lower at $180.75 per hundredweight. October feeder cattle dropped by $1.20 to settle at $240.90 per hundred, while October lean hog futures rose by 57 1/2 cents, ending the day at $76.50 per hundredweight. Class 3 milk futures had a huge run higher as they established a new life of contract high. When the closing bell rang, we had September futures up 75 points at 22.05. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
Samuel Case, news anchor with FISM News, sits down to read real comments from real viewers.
All righty, another big man here. Let's see. Ooh, upside down. Jen Harris, 52. She says, whoa, this is how I remember the news being when I was younger. Wow, Jen, are you actually 52 years old? That's not too old. You don't have to say when I was younger. You're young now. Anyway, she says, it was just information back then, read by a person who read well and said things in a way that was pleasant to the ear, but no bearing on the information. Well, Jen, I gotta say, that's awesome that you think I read well and that I'm pleasing to the ear. Actually, I gotta ask, is this a legit comment or you guys pulling one over? It's real? Okay, well, Jen, you have a good taste in news anchors here. And it's also awesome to hear that you don't think we're overbearing with our opinions and that we're just getting right to the point and that you're actually getting legit news from us here at FISM News. That's awesome.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. It's Rapid Fire Friday, so let's get right to the phones. We've got Minda calling from Georgia. Hi, Minda. You're live on Financial Issues.
Hi, Shana. I think you've talked about this, and I apologize. I think I missed it. But I know one of Dan's favorite stocks was MA40, so I bought a lot of it, and I think I have about 600 shares. And full disclosure, I used to work for him. well-run company at the time. That was years ago. But they pay a fairly good dividend. They're a foundational stock, so why the sell?
Yep. So you're right. We did talk about it earlier. So there has been, there's been changes in management over the years. I can't really, Dan's not here, and I can't really speak to why this was one of his favorite stocks. I don't know what his expectations were for it over the next 10 years. I do know that, Dan was very clear about not getting overweighted in a particular stock. So I don't know what those 600 shares, I don't know what percentage of your portfolio that makes up, and, whether you're up or down or not. And I can't really say, because Dan's not here to ask, I can't really say if he would still have the same opinion or not. But, things change rapidly, and things have changed rapidly even since we lost Dan. So, Dan was also very well known to say, don't ever fall in love with a stock. You date a stock, but you don't marry a stock. So, the things that I can say is that it really, it hasn't turned out to be, a stellar company. If you look at the 10-year track record on it, the price is right about what it was 10 years ago. Now, it's gone up above that, it's gone down below that, it's gone up above that, down below that. It's traded in a cyclical pattern, and it's paid, you're right, a good dividend of about 4%, 6% if you bought it when it was at some of the lows. But, a 3.8% return over 10 years is, not really... Probably, I can't say what Dan expected, but it would not be what I would expect to hold a company for 10 years and get that kind of return. Besides that, so, it's an okay company. And Dan always used to say, it's a boring company and, things like that, but it's going to track along, and it's going to, give you a good yield. The PE on it right now is 31. So that means that you're paying 31 times its current earnings. That's expensive. So, you would expect to pay, well, I don't know. There's some investors that I know that wouldn't even consider paying more than 12 times earnings, the really hardcore. And,
that's a good one.
Analysts, that wouldn't consider paying over 12 times. So at 31 times, do you really want to pay that for a company that has just had mediocre performance? And, at 4%, which is what the yield is right now, there's other places that you can get 4% in a CD with no risk. So I don't know.
Okay, and if I may, one other thing, I think the reason Dan liked it was because he said there'll always be a need for boxes, especially now with all the ordering. Would there be another type company you would recommend then? Because I think boxes are never going to go away with all the ordering and Amazon.
Yeah, I would definitely agree with that statement too. No, there's not a peer that we like right now. The industry itself has been in a little bit of a slump. So, not to say that won't change and there won't come a day when there's something that we can replace it with, but I would just say stay tuned to the buy list and see what comes on there. And, that's the great part of this strategy, too. It's a do-it-yourself strategy. So we're going to tell you what we think, and then, you get to decide whether you act on that, those suggestions or not.
Well, I do see it's been down a while, so I think I'll be selling some. Thank you. Thank you, Shana. I really appreciate all of your clarification today on that and holding and selling stocks as well. Thank you so much.
If you didn't hear the first part of the show, that was your question that we addressed in the first. Okay, great. So, we appreciate you, Minda. Minda's been a longtime partner of the ministry, a really great friend of the ministry for a long time, and we appreciate your feedback.
Amen.
And I love you guys. Thank you, you and Seth. Appreciate it so much, and the whole team.
We love you too.
Thank you, Minda. Thank you. Shannon, Minda brought it's an interesting point. I was thinking as you were talking there. It seems as though getting married to a stock is not a good idea, but we should be married to our strategy, right? That's the thing that's long term. The stocks come and go, right? But the strategy remains.
Yeah, absolutely.
Yep. Yeah, that's good stuff.
All
well,
right.
I know we have a couple more questions over on Ask Shana if you want to get to a few of these.
Let's do that. Anything happening on social? Or?
Yeah, there are a couple things on social here.
We did.
Moment.
Yeah, we did one of them.
Yep. My social media feed is being slow. It must be the people who are not wanting us to speak the truth. They're saying, "Oh, these guys are speaking the truth. We're going to."
Well, let's do those, Ashley.
That sounds good. Yeah, let's get to Joshua. He's 40. He's saying, "I've got 3 children, ages 12, 9, and 6. They have savings accounts, and where we put their gift money. And I was curious if you think we should take that and invest in the market on their behalf. If yes, should we open an investment account? I currently use Vanguard for each of them in their own name, or should we do a 529 plan? Or does that have negative tax financial aid implications down the road when it comes to college tuition?" Joshua's 40. Shanna, I'm in a similar situation trying to save for my kids, so I would love to hear your answer.
Yeah, absolutely. Those are great questions. So, and I'm sure Seth does this, and I'm sure you might too, Joshua. But take the opportunity to start teaching your kids about giving and tithing.
Yeah.
We did that with our kids as they got gift money, as they do their allowance now, and get them involved in the giving process. Help them decide. Show them some things that are happening. I've heard people taking their kids down to the soup kitchen and having them volunteer and getting involved in that and see what's really on their heart. The Operation. What is it, the Operation Christmas Child or the
Samaritan's
Operation
Purse.
Samaritan's Purse, and that really makes things real to children. So take this opportunity to teach them about giving first, and use this as a time to say giving is even more important than investing.
Yeah.
But I'm glad that you're thinking ahead like this, and it really all depends on what kind of parameters and what kind of purposes that you have set for the money in these accounts. Is this going to be something that you're going to be using to pay for college with? Is this going to be truly their money that they get to, save up and buy things that they want? Or, what is the purpose of it really? If the money's going to be there longer term, meaning, 8 to 10 years, then yeah, I think it might be an okay decision to start investing at least some of it. And I think the route that makes the most sense to me is to go the investment account route rather than a 529. 529 plans, they have some good qualities. They offer some tax benefits if they end up using the money to go to college. These days, I'm less and less confident that I'm actually going to give any money to any financial, any institution of higher learning because of the things that they are, the ideological things that they are teaching our children. So, there are tax advantages to a 529. The biggest problem for me with a 529 plan is that there are no biblically responsible options when it comes to 529s. 529s are all sponsored by mutual fund companies, and unfortunately, Timothy doesn't have one. So none of the investments inside those 529 plans are screened for biblically responsible activity, and most of them are not. As far as the implications for financial aid, if the account is in the child's name, yes, that could be an issue for getting financial aid in the future. But maybe you have it set up in your own name, or maybe you set it up in which that could potentially be something that financial institutions look at as well in determining the kid's need for financial aid. But maybe you have it set up in a grandparent's name with a transfer on death designation for each child. That may be a way to address that challenge.
Yeah, that's awesome. Shanna, I do love the concept that you said there. It seems like not only is the 529 not biblically responsible, but it kind of shoehorns them to have to use that money for college. Whereas if you do the regular investment account, say they're interested in college in their teens, and then they kind of realize, wait, I want to do a trade school, or I want to get married young, you can still have that money for them and gift it to them. So yeah, that's awesome.
You can in a 529 too, but you get a penalty or penalty and have to pay the taxes on all the accumulated earnings up to that point, which is the reason that you did it in the first place. So it kind of washes out the benefits.
It's awesome. Well, Shana, time has flown as we're having fun, and I think we are out of time for any more questions today.
Yes, it is. We were going to mention something at the end. What was it? Do you remember?
Oh, my golly. I can't remember what it was. Not Bible study. We had that this morning. It's going to come to me in the next 2 minutes, and I'll be like, oh, the show's over.
I know it. All right. Well, I hope that you guys did join Seth for Bible study this morning and that you planned on doing it next Friday as well. You can find information there at financialissues.org on the resources tab. We want to wish you a happy weekend. We hope that you have a wonderful day of worship on Sunday. And Lord willing, we will be back next week to remind you time is getting short. The master's coming back. There's going to be a test. And we want to be here to help you handle your investments in a way that honors God so that you can hear those wonderful words one day. Well done, good and faithful servant. I'm your host, Shana Burt. We'll be back next week for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.